only is this a start of the new series, it's also the end of the first half of 2017. So as always, Nigel joins us. Nigel, how has the first half shaped up and what does it tell about the second half? Any cues or any clues for that?
Well, Mangalam, we always talk about cricket, but this time around I'm going to go with football, So what really happens, if you just take a look at what's happened in the last few years, particularly 2008 to 2012, at that point of time, if the first half of the year was good, then the remainder as well was quite good. But if the first half of the year wasn't very good, then in fact that's what followed suit, particularly if you just take a look at what happened in 2011. But the last few years, well, it's not really gone according to the script. The first half could have been good, the second half could not have been so good, but at least for starters in 2017, the first half has been fairly good. We are put on close to around 16%. What holds in the second half of trade? Will we follow the model that we followed in 2008, 2012 when we went in the same direction? Or in fact, will it be a bit of a mix that's seen up for you on the screen? Well, the first 6 months then of the year, things have looked quite good because the institutional flows have been strong. Both FIs and DIs, they have been net buyers together, more than 40,000 crores coming in there. And if you want to take a look at the wealth created in the first 6 months of this year, BSE listed stocks, that number looks very, very large. I'll tell you what it is. It's 19 lakh crore in terms of market capitalization that we have added. If you just move on, well, I'm talking about the Sensex up close to around 16%. Well, in dollar terms, we have some rupee appreciation. So, in fact, FIs are happy. They're up by more than 22%. Focusing on the big index gainers then, if you just take a look at the indices first, the Realty Index, that is up close to around 60%. You have the breadth of the market as well, quite good. Small cap and mid cap space putting up more than 20 to around 25%. On the flip side, the defensives, they have been clean bowled. The IT space and the Farmer Index, both of them have seen some selling pressure. Let's focus on the big Nifty gainers then. India Bulls Housing Finance, that came into the Nifty. It did very well. It's up more than 60%. Tata Steel, Maruti, as well as IndusInd Bank is in there with big gains of around 35%. But the market moves higher when the large cap stocks move up. So these 5 stocks really that are up for you on the screen, they constitute 35% of the index. And when they gain 25 to around 38%, that's telling you that in fact they were really the backbone for the Nifty. You just take a look at the broader market as well. The first half of the year wasn't for the faint-hearted because all those high beta counters that have eroded wealth in the last few years, they in fact bounce back. Just take a look at JP Associates. That in fact is up close to around 200% approximately. You have Jindal Steel, India Cements as well after not moving for a couple of years. That has done quite well. And in fact, if you just pull up a few more gainers, Escorts, I remember the stock forever at around 200, 250. Stock has moved around 700 rupees. It's moved very, very well. And Dalmia Bharat, in fact, that one continues to outperform. DHFL as well is in there with good gains. But when there are big gainers, obviously, there are some losers. So the first half of the year, some of the stocks which would have eroded your money would be Divi's Laboratory after being a big outperformer for multiple years. That's down 20%. Reliance Communication as well has lost close to around 35% of its market capitalization. But let's wind this down then with some of the big gainers. Stocks would have double, tripled your money in the first 6 months of the year. India Bulls Ventures, that stock has moved from around 20 to around 170. Good going over there. Venky's, in fact, that's done quite well. Shakti Pumps really pumped it up. And in fact, Future Retail as well is up 190%. So the first half of the year has been quite good. Let's see how the second half of the year does shape up. History suggests that from 2008 to 2012, well, they move in the same direction. But the last few years, they've been doing their own jig in the second half. Back to both of you.
Right, Nigel. Thanks very much for that. So we're going to get you that update of the first half of 2017 through the day. Time for